Welcome to Paul's Monday Market Update, 169 for Monday, 13th of January, 2025. As always, you're always very welcome here, but just remember that you're always responsible for your own trading decisions. This is UK government gilts 10-year yield. For those of you who have been watching the well, I would say for those of you who've been watching the news, you'd be seeing it plastered all over, but it has not been. It has not been. What we can see here is, the kind of yields on 10-year, 10-year government debt, is trading at the highest it has done for many years, and is, as I say, tickling the soft underbelly of 5%. The 30-year yields are already through that. Is in terms of some sort of perspective. This kind of period here back in 2022, this was the A, when all the central bankers told us that inflation was transitory, but anybody with even a GCSE in economics knew they were talking out of their backsides, all right? But then also you've had here sort of all September time. This was let's call it, you can call it whatever you want, the trust turmoil, the trust tumble, whatever, however you'd like to just call it and describe it. That's where we saw that price pushed up above 4%, and of course the media were all over Truss and Kwasi, the Chancellor, and that invariably ended in their resignations. If we look a little bit closer here, in sort of July time when the new Labour government take over, we saw yields kind of drop beneath 4%, but then we kind of double bottomed there and worked our way back up. We had a little bit of a respite there. That was around the American elections, but you can see, okay, over the last 6 weeks, and effectively the impact of the Rachel Reeves budget at the end of October, that really has sort of kind of markets are just not convinced that it's actually going to work, and so of course that means that if they're going to lend money to the UK government, they want a higher risk premium for it. So no surprise to see 10-year, 30 yields just basically marching higher, as we can see there. Is that going to cost her job? It should, but we shall wait and see. And I know some people sort of maybe defending us, saying that yields are higher in the US, yields are equally marching higher in the US, and that's a very fair point. But I think they are in they're in an envious position that they have the opportunity to basically Trump is going to cut a lot of waste, and basically he's going to be very pro-business and encourage them to basically to grow, whereas the Labour government here are doing the exact opposite. And then also America is it is energy independent. Okay, it's energy independent, all right. Whereas we are not. Okay, and we even over this weekend we had to buy in from France. Okay, because to cover our needs, because of course we have what's the right word? We have hooked ourselves up to the Ed Miliband net zero nonsense and stuff and what have you. And so not only are we not energy independent, but we're paying far too much for energy as well. All of these things are going to create a drag on the UK government. And I think, as I said last week, we'll be in recession, all right, within 6 months in this particular movement. So on that cheery news, all right, that has also had an implication on sterling, and we'll look at that in a moment. But that's what we can see. That's what's going on in the UK, and of course, that's going to be I think that a story that we're going to see develop throughout this week.